Well, Dalal Street fell sharply on Friday to clock its biggest single-day decline in 4 months. IT stocks got battered in trade today. However, the markets ended in the green for the fourth straight week. Hello and welcome to the Editors Roundtable. This week, we take stock of the first quarter IT earnings, which was a damn squib. We put spotlight on the global investors betting big on India and tell you why you should be cautious on mid and small caps. I'm Sonia Shenoy, and with me, all the editors here, Prashant, Nimesh, Nigel. We have Hiren right here with us in the studio as well. Folks, you know, there are of course two big movie releases this weekend. There's Oppenheimer, Barbie, and as every movie has a climax and an anti-climax, our markets had an anti-climax, right? I mean, by the end of the week.
Just Infosys, right? I mean, actually, that headline that you said, Sonia, right, that the market fell 1%, it was the biggest fall in 4 months. Yeah. That tells you something, right? We've not had a 1.25% fall in 4 months now. Yeah. And I think if you look at the Bank Nifty, maybe small cap index has fallen 2% like we had one of these days. But it's been incredible. And it's not just India, right? I was looking at the US, the S&P has not fallen 1% in the last 38 trading sessions.
Oh, wow.
So it's a, you know,
no, it's
an up and up market.
It was a great market, so to speak, until what happened with Infosys. Yeah. And give and take everything, it's been a 13-14% rally in just 3 months, right? That's the kind of traction that we've seen. But Hiren, before we, get our discussions going, your thoughts, did you feel like this is a good opportunity to buy the kind of dip we saw post the Infi fall? Or do you think that now you need to get a bit cautious on the market?
On the overall market or tech?
On the overall market.
No, I think, look, I mean, one should always be judicious, but I'm bullish on the markets. I think markets intermittently will correct. They will find reasons like Infosys was a good reason for the market to correct, because otherwise it's very difficult to get a bull market to correct, right? You need a solid reason for people to step back a little bit. Some of those little excesses which build up when you have the market continuously running up, you need something to break to cool off the markets, and I think that's what's happening. But does that concern me? Is that a beginning of a deep correction? I don't think so.
I think
it's still
I'm glad that you said you're bullish on the market, because I think you're in a minority camp right now, because I've been talking to a lot of investors, mutual fund guys as well as individual guys. They all seem to be raising cash levels. They're all sounding very cautious. They want to just stay away from the market for the time being. And that's exactly the reason why the markets are not falling as well, right? Everybody wants to buy the dip, and maybe that's not happening.
Yeah.
How are you positioned? I know you're bullish, but largely within sectors, how are you looking at repositioning yourself, given that some sectors have done very, very well and have moved very fast?
Look, Nimesh, I think my view has been that, first of all, about raising cash and stuff like that, we don't do that, right? And experience has shown, and that's one thing, at least having been around 30 years and working with some of the greatest investment minds, is that when you're in a bull market, don't try to be too cute. Don't try to optimize on these little rallies and small corrections. Just stay invested, right? So we are fully invested. We are staying invested. We are telling our clients, even if they tell us, is this a level to invest? We say, yes, this is a level to invest, because we are bullish on the markets, right? To me, this reminds me of the 2003 to 2007 bull market. And pretty much those kind of sectors will do very well.
The question is, is this 2003 or is this 2005 or is this 2006? What do you think?
Well, good question. Actually, for example, at Alchemy, when we started business in 2002, valuations were really cheap. The starting valuations were cheap, right? That's not the case that we are today.
Yeah.
But having said that, I think we are in a very different context as far as the economy is concerned. When a $3.5 trillion economy starts to move and compound at 10-11% in nominal terms, the amount of wealth that you will generate is going to be tremendous, right? And since you mentioned, it's not as cheap as it was in 2003, but it's not expensive either, right? And then I tell people that, yes, we use history as a guide. So everybody who feels a little nervous about the market says that, okay, my 10-year, 15-year average P multiple of the market is 16, 17 times. Now we are trading at 19 times, so we are expensive. But who said that markets can't trade at 21 times forward
Absolutely.
or 22 times forward.
I'm going to ask you to hold that thought because, we're going to talk a lot more about what's leading to this growth in the market, etc. But the big headline this week was Infosys and the weakness in the guidance, of course, the stock price as well. Nigel, you've put together some data for
Well,
us.
you're talking about movies, right? It was like a love story between the bulls as well as the Nifty. The Nifty was heading towards 20,000 or was looking fantastic, and suddenly the heartbreaker came about. Infosys, they came out with their set of numbers and they were in line. The problem is they went ahead and they scaled back the guidance to around 1 to 3.5%, from that 4 to around 7%. And the street got a little bit nervous because the question is now, is it a company specific issue or is it a broader read-through for the industry? So that's why the street got a little bit nervous, and that's why we saw that profit taking on Friday itself. And other IT companies, well, either they're too optimistic, and Infosys is being realistic because HCL Tech, whether it's LNTTS as well, or even Coforge, all of them said we have put out a guidance and we are sticking to that. In fact, we had the management of Coforge on the channel today, and they said, come what may, we are going to meet this guidance. They were very, very confident out there. Mr. Singh joined us on the channel. He said, no worries on the guidance. I'm going to hit these numbers. Now, the asking rate is a little bit steep, particularly if you look at HCL Tech. They are talking about growing from year on by 3 to around 4% is the asking rate to get to that guidance that they put out. And for LTTS as well, they have to grow between 4 to around 5% on a quarter-to-quarter basis to hit their guidance, which is quite a tall ask then. The other problem is, in April, you would have said, okay, these disappointments have come about. It's par for the course. The Nifty IT index at that point of time was trading at around 20 times. Now, the IT index on the whole on a PE basis, forward multiple, is trading at around 23 times odd. So, valuations, if you look at all these companies, particularly some of these mid-cap companies as well, they're trading at 25 times odd. So, maybe on the valuation argument as well, that's a little bit out of the window. But today, I think the big story was Infosys, the heartbreaker. What do you do with that? I mean, sometimes the rebounds are good, right? How do you approach the IT pack from here on?
See, I think, at least from our perspective, I think there's no great fun in the large cap IT space now, right? But if you were to still choose, I would still choose a TCS over an Infosys. I think it's a more steadier ship. Having said that, I think that you may see slowness in IT over another quarter or so.
Yes.
But my belief is that we are, as soon as there is confirmation that the US is going to stop raising rates, which is when the corporates in the US will start opening their purse strings, because broadly the uncertainty around rates would be over. I think there is a new big tech spending cycle which is waiting and which is going to be spurred by AI. In fact, Infosys, before the results, gave won an order, a $2 billion order from an existing client on AI. AI is the next big thing. The big tech companies have doubled down on AI, whether it's Microsoft, Google. And it's like this. Let's say if Walmart spends on AI to improve certain processes or products or a service consumer facing, the other retailers have to follow.
Yes.
Right? Because it's a competitive market space. So I think, and Indian IT companies have always benefited whenever there is a big new tech cycle that starts. And I think AI is that tech cycle. It's just that people are holding back a little bit in the US because they're uncertain about the macro. They're not yet certain because every time you see a lower inflation data, but somebody from the Fed comes and says, you know what, we're going to get to 2% inflation and we may hike one more and we may hike one more. And that's keeping people a little bit at the edge.
Right.
But I think that, if the tech stocks correct, and they could,
yes,
right, and they have already started to correct, I think it could be a good hunting ground, because in another 1 or 2 quarters, once things at the macro level settle down, you will see a big tech spending cycle. That's what we feel is going to happen. Anyway, our preference has never been for the large cap tech stocks because I think their base is just too big. And the reason why you mentioned some of the mid-sized companies are so confident about maintaining their guidance is because the way the tech spending is happening is that a lot of the large projects are being broken up into smaller projects.
Right.
And these smaller companies are more nimble. They are able to go out and get these orders, and they, at a structural level, will grow faster than the large cap. There's nothing wrong with the large cap.
Right.
I think if you're a big mutual fund, if you have to allocate a lot of assets, then you may need to have exposure to large caps. We don't have that problem, so we are focused on the mid-caps.
Mid-cap idea.
And I think you will get a good entry point with what has happened to the whole pack. But I would be a buyer at lower levels in tech, because
So
I
that's a
see a
good-
big spending wave coming.
That's a good hunting ground. Mid-cap
Yes,
idea.
we had, by the way, Nitin Rakesh, Nigel, in the morning
Yeah.
with us, Sonia.
Yeah.
He was, of course, with emphasis now, but I asked him whether he wants to wear his old market hat, and I asked him whether he would buy IT stocks. He was of course, he's got skin in the game, and so
obviously.
the answer is in the affirmative. But he was very clear. He said this is a secular, structural kind of story,
Yes.
and Indian IT will continue to do very well. I want to just point out a few headlines now, and I did this with China. I mean, with the negative press that China has been getting over the last many months, and I put out a few headlines the last time on this program. I want to put out the positive headlines that India is getting in the global press. Now, there are various ways to read it, right? People say, well, we've seen the story play out before, and it's not good news because it's getting so much publicity, peak bullishness, etc. But for what it's worth, let me just quickly tell you, because the optimism from FIs has been super strong. The numbers are on your screen. FIs in the last 3 months have put in 75,000 crores in terms of money into the market. And, month so far has been almost 20,000 crores. In June, it was 27,000 crores. In May, it was 28,000 crores as well. So we are talking some very, very large numbers. On to the clippings, right? And just not even looking at beyond this 1 week, actually maybe 1.5 weeks or so in terms of what we picked up. Capital International, one of the big kind of global funds, the bluest of blue chip names with a substantial amount of investment in India, put out this essay which they titled, "Would India be the breakout emerging market of this decade?" There was Martin Wolf, who's the famous columnist at Financial Times, who asked this, not asked, but he basically opined that Western leaders are making a sensible bet on India. Bernstein put out a note basically reviewing the decade under Prime Minister Modi and the reforms that the country has seen. There was a headline at a G20, out of Gandhinagar, where the World Bank chief basically said that he's most bullish on India in a long time. And to kind of wrap this up, out of the Harvard Business Review, which basically looks at business strategy, etc., there was an article which I picked up, which was interesting. They said, "Does your company have an India strategy?" A lot of India, right? India is the hot headline in that sense.
You didn't say this is India's decade.
I'll tell you, by the way, today EPFR put out a note. Actually, it was JP Morgan which was using EPFR data, and they said that India remains the highest net bought emerging market, YTD, among those that report weekly data. So it's how you look at it, right? Because at least for me, I've also seen this play out in 2007, as you have and many of us have, Hiren. But the difference is China was still the predominant player. Now there's no love lost for China. That is the sense that one picks when one speaks to people. And the second is manufacturing seems to be more, it seems to be a real thing, right? We are seeing that happen on the ground with PLI, real incentives, etc.
Yeah.
Would you agree, briefly?
Yeah, I think there's nothing to be defensive about India getting good press around the world, right?
People use that as a contrarian indicator, that this is at a peak and, so there's no way to go but down, it can't go any further higher.
It's good not to be carried away. But, it's like this, every country which has been an emerging market and which has become a developed market has had its place in the sun. South Korea had it, Japan had it, China had its own day in the sun, and not for 1 year, but for years together. And I think there is a reasonably good probability that India is having its day in the sun. So I'm not, I don't want to use that as a great contrarian indicator to say that there's a lot of hype about India and so on and so forth.
If anything, it's a reaffirmation in that
It's
sense.
a reaffirmation, and I think it's good that finally people are sitting up and taking notice about India.
Hey, Nimesh, you want to tell us to be a little cautious about the mid and small caps?
So, Sonia, last week I put out a piece on why liquidity is helping the mid cap and small cap and the broader market, so to speak. And I'll just pick what Hiren said about narratives, and that's what exactly I'm trying to do in the broader markets. Let me just go to the wall and explain what has mid cap and small cap done, and why narrative sometimes is actually bad for retail investors. So let's look at what's happening in the broader markets. They're absolutely on a tear. The mid cap and small cap indices in the last 3 months, in the last 3 months itself, the mid cap index is up close to 18% and the small cap index is up close to 20%. So that's the only last 3 months of move in the broader markets, the mid cap and the small cap indices. Now, within those indices, I've just looked at some 8-10 stocks which have actually gone up more than 100% in the last 3 months. Look at the list now. Patel Engineering is up 165%. Inox Swing 156%. Mgmt Dog is up another 144% in the last 3 months. Suzlon is up 124%. The likes of Jindal also 116, Genius Power 110, and Force Motor is up 109%. Now, these are the big movers in the last 3 months. But what is common in all this, common factor in all these names? The institutional holding in these names is very, very low. Look at Patel Engineering. There is negligible institutional holding. Inox Swing, virtually zero institutional holding. Even in Mgmt Dog, the government holding is 85%, and there is not a single institutional investor, even in Mgmt Dog. That stock, you remember, is up 5 times in the last 1 year. Suzlon, just 6% institutional holding. In fact, in Suzlon, the promoter holding is also less at 15%. Jindal Saw, the holding is just 15%. Genius Power, which has been in the news of late, only 5% is held by a single mutual fund investor. There is no other institutional investor, even in Genius Power. So is the case with Force Motors as well, just 5% across mutual funds and institutional investors. So that's what, the institutional holding is very low. I'm just highlighting a very interesting report from Sanjeev Prasad. He says on Midcaps, it's all about narratives after narratives. And they've been very surprised with the kind of narratives which have been spread and the themes which have been talked about. And sometimes they do disappreciate moves in the stock prices in the mid-cap and small cap. But broadly, over the years, he's figured out that there are many times there are disappointments. Instances being MFIs in 2015, consumer durable names in 2018, and recently the specialty chemical names all have not lived up to their expectations. What the narratives have been in the last many decades for the mid cap and small cap. So that's the interesting report from Sanjeev Prasad. Now, so the key message for the retail investors is do not get carried away by the narratives in the mid cap and small cap. I just want to leave another example. I just met a very large investor from South last week, and he made a very interesting observation as well. This particular gentleman has made 100 times return in JBM Auto in the last 10 years. 100 times, yes, 100x returns in JBM Auto. But he sold out completely between 650 and 850. And he said that valuations matter to me a lot. And when people start talking about narratives, that's when he looks to sell. So narratives in mid cap and small cap is something when investors need to be very careful about, and that's what is happening currently in the broader market. So, as I said, there is liquidity which is winning the fundamentals, but do keep in mind the narratives in the mid cap and small cap actually turns out to be a bad investment for a lot of investors.
All right, Nimesh, thanks a lot for that. Let's do one thing. We have to take a quick commercial break. On the other side of the break, we'll put the spotlight on the home improvement theme and continue our chat with Hiren Ved. Stay tuned.